Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners and now our clients most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and support each of you. Today, we're going to have a discussion about geography. And you should see my screen or one of my screens shared with you. And on the left-hand side, it's a map of the United States. So you and I are United States citizens, and typically who we're helping start and grow businesses, typically who we're helping improve financial literacy, typically who we're helping access funding are also U.S. citizens. So the United States, of course, is composed of 50 different states. You know that, it's depicted here on the map. But those boundaries are kind of soft. So the first point of financial illiteracy we need to dismiss on this topic is that we have to form a business where we live, because that's not true. We could form a business in any of the 50 states. You don't have to live there. So then the question would come about, well, how do we decide where we want to domicile or base or form our business? Well, maybe it's where we want to operate. You know, if we're going to operate a bakery, it probably makes sense for the bakery to be where we plan to bake goods and sell goods. If we have more of an e-commerce or a more service rather than goods, then it becomes a little less relevant. But also we could form or don't domicile our business in one given state, but operate in other states, one or more. So the truth is really there's a lot of choice. Where do we want to have our business based? And it really, the primary criteria shouldn't be where we live. That's almost inconsequential. So from there, we might say, well, let's think about money, right? Because why does someone start or operate a business? Typically, it's to generate profit. That's why businesses normally exist, to generate profit. Could very well be mission-based as well, but they always joke, no profit, no mission, because the business won't exist. So what we can see on this map is that there are different corporate income tax rates in each state. So let's kind of study this together. Well, interesting, we see some gray states here: Texas, Ohio, South Dakota, Wyoming, Nevada, and Washington. Well, what's going on with those? Oh, there's no state income tax in that 1, 2, 3, 4, 5, 6 states. No corporate income tax. Well, what about other states? It varies, and you can see that there is a scale. So the states with the highest corporate income tax rates are dark red, and then we get to red and orange, then we blend into a very faint yellow. This map I really like, and it's from the Tax Foundation because it shows graphically with both colors and numerically. So let's say New Jersey. New Jersey is a little small, so it's broken out over here in the standalone. But New Jersey has 11.5% corporate income tax rate, which is number one. Now, this is one instance where you don't really want to be number one. It's the highest. So would we want to pay the highest taxes? Well, and I understand we all need to pay our fair share, and taxes play an important role of supporting our economy. But in general, you want to legally minimize your taxes because that's literally profit out of your pocket. So let's just do a contrast. So let's say that you and I helped an entrepreneur get a business started, and we looked at two different scenarios: New Jersey and then Texas, one of these gray states. Well, if we need to calculate what the cost of taxes would be, we'd have to calculate the expected profit. So let's just use a round number. Let's just say that this small hypothetical business generated $100,000 of profit in a year. Well, if they were in New Jersey, they would pay $11,500 in state income taxes. $11,500. If they were in Texas, they would pay zero. So literally, if you and I were advising that entrepreneur of where to form his or her business, they could save 11.5%. Their profit would go up. Bottom line, they would have saved $11,500 by the simple decision to not be in New Jersey, but to be in Texas. And so we've already covered that we can form a business wherever we want. It doesn't need to be where we live. It's actually very common for businesses to be formed in states other than where the owner resides. So New Jersey, of course, is the most expensive, and the other states are somewhere between 11.5 and 0, and each state shows. If you're thinking about the startup business funding package, which we had a really good training on yesterday, had a lot of positive feedback, you know that we're providing a free business address, and then we turn around and provide free filing with the Secretary of State to get the business entity formed. Well, to no surprise, we want to put the client's best interest first. So in the startup business funding package, we're going to form all of those businesses in Texas, because there's a number of reasons for that. One of which is they're going to save in the taxes because there is no corporate income tax rate. That's why that's gray. That's why there's no number below it. There's no corporate income taxes. So if you're thinking about promoting the startup business funding package so you could generate income, you make $1,250 of profit from each one that you enroll, then hypothetically, you could target home-based businesses in other states. And we've talked about how you can use Data Axle, used to be called Sales Genie, to identify them. Well, which states would you identify? You could target any state you wanted, but obviously those with the highest tax brackets would probably be the ripest. So those that have the burgundy, the dark red, and even the medium red would be your top choices. So businesses that are in California, Alaska, Minnesota, Iowa, Wisconsin, Illinois, Pennsylvania, Maine, Massachusetts, Delaware, Maryland, District of Columbia, and of course, New Jersey. So I'm not saying that you need to focus on home-based businesses in those states, but we could certainly create an argument that we have the greatest value proposition in helping those home-based businesses not form in their state of residence, but in fact form in Texas, even though they don't have to live in Texas. So let's pause there. Anyone have questions, comments, concerns on that very simple concept? My reason for bringing it up today is I think some of you may not have ever paused or needed to pause and look at the tax rates by state and realize that the startup business funding package, which offers a lot of value for sure, but one of which is the fact that we're saving clients taxes year in and year out. So in the Q&A, it's kind of like a chat box of Zoom. Anyone have questions, comments, concerns on that first point that I'm sharing with you? Adam, Andrew, Audria, Andrea, Bernard, Brenda, Charles, Denise, Reginald, Eric, Jeanette, John, Ken, Lon, Pauline, Ron, Sally, Cedrud, and Trevor. Makes sense, right? Right. It's just a lot of times entrepreneurs don't step back if they are going to form a business, whether it be an LLC, C Corp, or S Corp. They just normally file it wherever they reside. But that can be an expensive decision. So another reason, separate from taxes, I'm going to leave the map up because I think it's quite interesting, but separate from taxes, what is another key concern or consideration that an entrepreneur should have in terms of where they're forming their business? Well, I think the second behind taxes would be, where do they have access to tax-based incentives? There are some states, there are some counties, there are some cities, there are some regions that have economic incentives to encourage entrepreneurs to start and grow small businesses. And so that's another significant factor. You know our model, right? There's no secret to it. In the startup business funding package, we own a commercial building, so we provide a unique commercial address in Texas. And furthermore, it's in the taxing district of the Chapman Fund, which allows participants to have geographic access from 30 up to 250,000 to start or grow a business. So that's a significant difference of where you base your business, not only taxes, but also what types of incentives are available to the entrepreneur to have their business there. Now, some municipalities have incentives to relocate your business, and that's not what the Chapman Fund is. The Chapman Fund is really primarily based on starting new businesses. I don't have a database, and I don't know if there is a database of literally every tax-based incentive program across the country. So probably what you would have to do, so I know about the Chapman Fund. I'm very familiar with it. The gentleman that runs the Chapman Fund used to be my employee, used to be on payroll with me. But now he works at the Chapman Fund. But with that being said, there may very well be other types of tax-based incentives scattered about across the country that we don't know about. But you could research that, right? You could contact your state government, your county government, any regional councils, city council, and research that. So I'm not here to say that the Chapman Fund is the only one of its type. I truly don't know. But when I worked for the SBA here in the same geographic area, that's where I learned about the Chapman Fund, and then actually started doing some educational programming in the community at libraries and through EDCs, economic development corporations, with this group. So I'm very familiar with it. It's great. It's real. They're looking to fund money. So what's the point today? I think that you want to give consideration when you're advising clients of location matters, not only because of taxation, but also because of access to financing. Now, when you get to Bank of America or Wells Fargo or JP Morgan Chase, you have your big national banks, and so they typically are going to operate the same in each state. And then there's regional, there's even local community banks that might have some unique programs. And so I can't answer to all of that. But I really believe that for most small businesses, getting their first tranche from the Chapman Fund is the way to go. And then we can add on additional tranches of capital if 250,000 is not enough. The question that John has, which is a good one. So let's say that a client enrolls in the startup business funding package. And so we provide them an address and we file with Secretary of State so they have a new business in Texas. I feel like what John's asking is there a problem if they operate also in Oklahoma or Kansas or Colorado? No. Many businesses operate outside of just one state. So we're talking about where the business is based, where it's domiciled, where its official business address is what's going to allow us to qualify for the Chapman Fund and allow us to qualify for the lower taxes. All right, so let's get into other questions. So Adam's bringing up a point that it would make sense to target the high tax rate states. Frankly, I would be, if I were you, I'd be using Sales Genie / Data Axle, and I would be reaching out to all newly formed DBAs and home-based businesses, even if they have formed a LLC, S Corp, or C Corp, because if they're home-based, they're failing the credibility standards to qualify for much funding. So we know that. So it's not as if that they have to go dissolve or close their, and we have multiple Johns. So John Lay's asking, he was confused. I was mentioning a different John, but John saying, or suggesting, well, should the business dissolve what they already have and just form a new one? Well, maybe, but maybe not. Maybe we just form a new entity for them through the Startup Business Funding Package. That is really their capital raise entity. So many people own multiple businesses. Many of you, I think probably most of you, own multiple businesses. There's nothing wrong with that. So we could form a new business for them through the Startup Business Funding Package that has this value proposition. And then if they wanted to loan or transfer some of the funding that they generate through the Chapman Fund or through the Startup Business Funding Package entity that we've created into other entities, that would be at their discretion. All right, so let's get back to the rest of the questions we have here. Cedrudin's asking about moving. So sure, you could move a business, but that's not our model. That's not what you and I work on. With the Startup Business Funding Package, we just found it's easier to hit the reset button and start a new business using this value proposition. So we don't get involved because it takes a lot more time and effort, and often there's cleanup and there's a lot of variables there. So for us, with the Startup Business Funding Package, it is expressly based on starting a new entity. So this is the value proposition. Thank you, Cedrudin, for your question. We talked about Adam's comment about focusing on the high-cost states. Ken brings up personal taxes. Yeah, so we're not talking about personal taxes. Typically, personal taxes are going to be driven based upon where you reside or where you're doing the majority of your work. What we're working on together isn't about personal, it's about business. And so that's why this is referring to the corporate income tax rates, the business tax rates. All right, let's see here. What other questions we have? I think John's question was about dissolving. All right, so then Adam asked, will we be required to assist our clients with setting up a loan package? So what's really important is that we're transparent with our clients. So they know exactly what they're getting, exactly what they're paying. And so I think we've done a really nice job. If you go to chapmanloanprogram.org, it has a bulleted list. It has a training video. And as we covered on yesterday's training, they can literally click right here. It'll open up a new window, and I'll go ahead and click on it. And it brings up the enrollment form. So a little flyer and then the actual form. So we're very transparent. You're welcome to do that as well. The point is that there is no performance fee for the Startup Business Funding Package. So this is something that you could use in conjunction with clients that you have in the credit and funding program if you wish. Then, of course, then you would qualify for a performance fee from their capital raise, or it could be standalone. I have some of you that are using this as a door opener to generate clients, and then others of you are using this as an add-on for your clients that are in credit and funding that lack a credible business. So that's up to you how you want to go to the marketplace. But it's a very valuable proposition. And going back to Adam's question, so No, we're not building a loan package in the startup business funding package. We're providing these services that are here, and those are summarized all the way down the bottom on Schedule Exhibit E. So there's a match, right? What we're saying that we're going to do in the agreement matches what we say we're going to do in the flyer, and that matches what we say we're going to do in the video. So we have good integrity. All right, so John Lay, we have multiple Johns, so there's confusion earlier. So John Lay's asking, can he charge a performance fee? I suppose you certainly could. Yeah. So we're going to provide each of you an editable version of this agreement. So let's go all the way back up to the top. So if you don't have it, we'll provide you the flyer, editable version of the flyer, so you can change your contact call to information, and we'll provide you an editable version in Word of the agreement. So technically, yes, you could make any changes that you wanted to make to that, John, or others. The primary intent of the pricing is to have a $2,500 enrollment fee, which we split 50-50 with you. And we turn around and provide the client $10,000 immediately of receivables. So they're seeing an immediate return of their investment, fourfold, plus all the value proposition that we've been talking about. So again, we have a match, we have consistency. What we say that we're going to do on the website is what we say we're going to do on the flyer, which is what we say we're going to do in the agreement. But yeah, so if you wanted to change the terms for your clients that you sign up, you certainly could. We would just split that 50-50. That's our model with our branches. All right, so let's see what other questions. Oh, okay. When Trevor was just asking that, would it be a 50-50 split? Yeah, so we're going into it as equal partners. So there's no winners and there's no losers. Ultimately, the client's the ultimate winner, of course. But from your perspective and our perspective, we split 50-50. And so I guess that gets to Timothy's question. Let's go back over here, go back up to the flyer. So this is where we normally disclose to the client the price, as well as down in the agreement, of course, but we want it to be very clear. So if you are changing the price, you would want to disclose that, right? You don't want people to be surprised or misled. So with that, if you're going to change pricing, just be sure to change it on the flyer as well as in the agreement, so there's no confusion. All right, let's see what other questions we have. Audrey asks, is it mandatory to have business credit for newly formed businesses before applying? That's a great point. So on the website, we talk about assistance in building business credit. On the flyer, we talk about building $250,000 of business credit here. And of course, in the agreement, we build business credit. So there's a match. Is that required? Well, it's certainly recommended, right? Because otherwise we have an entity that's in good standing, that's credible, but it doesn't have a Paydex score with Dun & Bradstreet, doesn't have an IntelliScore with Experian Business. So it doesn't look as strong. So we have put this package together very purposefully, very specifically, to have a business that's positioned for fast funding. So if any of you want to start taking steps out of this, you can. I mean, you're the one pitching it to your client, because you're going to have an editable version of the agreement. You can change the agreement, you can change the flyer, but this is what we know works. So if you want to change it, there could be some volatility in results. So I wouldn't recommend it. Now, keep in mind, and sometimes people get confused. They think, oh, this is all about the Chapman Fund. Absolutely not. When we have a credible business, we can go to any type of business lender. This isn't a one-stop shop of only helping people with the Chapman Fund. We can help them with SBA guaranteed loans or non-SBA guaranteed loans. We could help them with lines of credit. There's an infinite marketplace for business funding. The problem that we're solving together, that you and I are solving, is a lot of entrepreneurs don't have a credible business. So they want business funding, but their business isn't credible. Well, this is somewhat of a checklist, right? So you could either go through and help them have a business that is credible elsewhere, which is fine, or we could use this turnkey resource, which has several advantages that we've talked about, especially the fact that it's in a tax-free state, and then it is in the geographic area of the Chapman Fund. All right, so we're almost at the bottom of the hour. What other questions does anyone have? A number of you really took the bull by the horns yesterday and started enrolling clients in the Startup Business Funding Package. Brenda's on. She enrolled her first one. Well, actually, her second one yesterday. Forget who it was. Was it Melissa that enrolled 10 yesterday? So she made $12,500 profit yesterday, right? Because each client, it paid her $2,500. So she brought in $25,000, and then we split it 50-50. So, Melissa made $12,500 yesterday. That's not get rich quick, and that's not going to impress any of you. That's not the point. But there's a tremendous need. There's a tremendous problem that we're solving. The problem is many entrepreneurs want and or need funding to start or grow a business. The problem is most of them don't have a credible business to get the funding that they need. So the solution that you and I provide is packaged. It's easy to explain. It's easy to understand. There's great resources available. You can have them watch this little video. The bullets are self-explanatory. If you don't have this flyer, this editable flyer, email us and we'll get it to you. If you don't have the editable version of the agreement, let us know and we'll get it to you. And you're able to start enrolling clients. It's not that complicated. Any other questions, comments, concerns on what we've talked about today, which the overriding message is that it matters where you form a business, both in terms of taxation and in terms of funding. That's the bottom line. Where you form a business matters financially as it impacts your taxes, which is be an expense, and as it impacts your funding. Make sense? All right. Well, have a great day, and we will see you back tomorrow morning. Same time, same place. Thanks. Bye-bye.